All right, so welcome to this, our second minicast. And what we're trying to do here is obviously create a little bit of a shorter, easier to digest content that's a little bit more up to date, I guess, with what's going on right now. So, Justin, what's going on? It is November 6th. Anything special happened lately?
It's my birthday this week.
Oh, yeah. Is it the 8th?
Yeah.
Yep, same as my mom's. Happy birthday.
In advance, happy birthday, Eve. Yeah. There's
Good.
also like an election that happened apparently earlier
Yeah.
yesterday. Something.
Yep.
I caught a bit of it. I went to soccer instead. It's probably better for me mentally, but actually, physically and mentally, it was the right decision. But it is the elephant in the room. It once, everyone, all the commentary, a lot of questions, some from clients, some from others as well, leading up to yesterday was tell me about the election and the implications. And then now that
What
the
should I do,
election, U.S.
Justin?
election is over, what should you do? You should YOLO everything into Bitcoin and DJT if you really knew. I think people want to be reactive because it's a catalyst, right? It's something notable. It's a defining moment of some kind, and of course, there's something always happens. But what that something is, I think, is largely unestimatable or unpredictable. Frankly, like it was literally a coin flip beforehand, and so to make large or significant adjustments because of what you may think might happen is probably a foolhardy way of approaching things. So the
Yeah.
question that was posed to me before, as well as you just posed to me now, is largely do nothing, right? And that sounds kind of dull, but that's what I told people. I can get into why, but tell me what you would have done.
Sell everything. No, you're right. We have this action bias, and that's the thing. We've talked about it before in this podcast. I've talked about it a number of times in blog
Mm-hmm.
posts. You feel like there's something happening, and we always want to be in control. We're sort of, I guess, geared that way. And sometimes control means our ability to act and do something about something, which we really have no control over. And I think this election in particular, and I've been following these U.S. elections. I think the first one I followed on TV was George W. Bush's first election in 2000, which was also another weird one with the recount and all that stuff that happened afterwards. But I don't think there's ever been one where, you have this extreme polarization. It's no longer between center left and center right. It's people on the far left and far right being very exclusionary of another. You didn't see Trump coming on to any of the talk shows where the hosts were kind of on the left and vice versa. You saw a lot of fear mongering about, what's this going to mean if the other side wins? I conveyed this to clients just a few days ago in an email. And again, why not to do anything? Why not to worry about the election? There isn't much we can do. But you have this one side saying, obviously the Kamala Harris side saying if Trump wins, he's a fascist. I guess she did say he's a fascist, and bad things will happen. And then vice versa, the Trump side saying the economy is doomed if she wins. We'll lose American exceptionalism or whatnot. But at the end of the day, it doesn't matter that much. Other things will happen. If we think about Trump's 4 years, some good came out of it, some bad. And I mean, a lot of it, what happened in those 4 years was completely out of everybody's control because we had a pandemic. And then the years after that, do we blame Biden on inflation? I don't think so. But I don't think the worst case scenario that one side posits is going to come to fruition, just as it wouldn't have the other way around.
Well, that's exactly it. It's a much ado about nothing, even though it is something. And
Mm-hmm.
and I feel like modern politics has sort of come to this method, this process, this yelling and polarization. We will see this again when we have our own federal election in the near future.
Mm-hmm.
Unfortunately, it just seems to be has become
It's
the
getting
way of
worse and
doing
worse and
things.
worse. Mm-hmm.
And so, yes, there is some impact to it. But I find that in spite of who's in power, the economy generally tends to react accordingly. It tends to work itself out in some ways. Capital will flow where it wants to flow, right? And so whether whoever ends up being in the presidential office, yeah, I don't think should make your investment decisions on that, right? You shouldn't just be buying, one sector or one industry because you think that that person is a champion of that industry, right? It's probably not the right reason. You may take that into consideration, but it's not the sole reason why you should be making wholesale adjustments to your allocation, right? I mean, Trump has proposed, for example, like 10%, universal 10% on on all tariffs from every country, right? And if it's come from China in particular, it's like 60%, right? Like this is going to be expensive, and quite likely it could be, if it does go through that, it could be very inflationary. People feel like inflation hasn't gone away. It has largely gone away, but now it might be coming back again. And the bond market is certainly reacting to that. People have moved money already, but for you and I, and in terms of like the grand scheme, the large time frame ahead of us, you kind of just roll with it, right? Sounds dull.
Yeah, exactly. Getting back to the, I guess the question a lot of people had in the last little while here is, what should we do about this election coming up? And I've been asked the same question the last two election cycles in the U.S. And it's always the U.S. that we worry the most about.
It's the largest economy.
The issue really, it comes down to, like, what could you have done predicting this election? If you had gone to cash because you feared a Trump outcome, right now, today, you're looking at the markets up over 2%, and some areas up quite a bit. What would the situation have been if Kamala Harris had won? I don't know. But I mean, let's look back at Biden's win in 2020. November of 2020 was one of the strongest months ever because people held their money back out of the markets. And there has been some of this visible to us, that there is, and I'll share my screen here at a thing that I look at often here. So this is the Fear and Greed Index on CNN. A lot of people refer to this. I've been looking at it for years. And when you look at this number here, this is the historical, just going over the last, I guess, year, what it's done over the last year. It was at a pretty high fear level on November 4th. Or modest fear, I guess, November 4th, and it's just recently come up to be greed again. And when you look deeper what this is comprised of, one of the things is the put call options. So that's the security that people sometimes buy on the markets, really. If they buy puts, they're basically betting against a stock or betting against the market. And what this is saying is that there is a higher ratio of puts versus calls, which puts us in the fear category.
People are buying insurance. Yeah.
Yeah. And that insurance has to come off at some point. Those positions have to be closed. If it gets down to like Mr. and Mrs. McGillicuddy, they had some money to invest in October, but they decided to wait until this election passed before doing anything with it. Well, at some point now they need to do something with that money. And if it was on the sidelines and it gets invested now, that potentially can be a positive too. At the end of the day, what I'm saying again is, I'm going to repeat myself like a broken record. Don't let politics impact your investing. There's nothing to be gained from it. Again, if Kamala had won, maybe the markets wouldn't be up as much today. But I think if you looked at the markets from now until 5 or 10 years from now, there would be very little difference regardless of who happens to be in power. One big thing that's sticking out to me is, and we've talked about this before, small cap value. And I've probably beaten this one to death. Small cap value has been suffering for years and years and years. But probably what that particular sector does is a little bit representative of, I guess, risk onness of the markets, the animal spirits. It's no longer just those big companies, the Apples and Microsofts that are doing well, but smaller companies that are starting to pick up. And one of the ETFs that tracks that, the dimensional small cap value. Another one is the Avantis US small cap value. They're up 7.22%, upwards of 7% on the other one. That's really coming through the markets today. That is no indication of what markets will do over the next couple of days. I might sell it back tomorrow with the way things have gone for stocks in that area. But
the implication there is that small cap companies, not the mega cap international companies, but the small cap companies, or in the United States at least, are largely domestic focused. Right, they're industrials. They're companies that their entire customer base is probably within or largely within the United States, and so it's a play on U.S. first, right? If you're adding tariffs on imported goods, well, that means there's no tariffs on domestic goods, right? So there's a play on that.
Yeah.
Right.
That is one of the themes that's sort of coming about today.
Yeah.
Another one thing I've noticed today is energy and copper stocks both down. So the price of oil is down about 2%. I saw this morning copper down about 5%. And what that's showing us is this thinking that with Trump in the White House, there probably will be more drill baby drill in the U.S. and U.S. will produce even more oil. It's already become a net supplier to the world of oil, and the largest producer of oil, energy. And copper being down so much is probably a factor of the markets expecting that there's going to be a slowdown in EV purchases, less government support for EVs. And, again, on the bigger picture there, I think that's a trend, that's a technological trend that's going to happen regardless. More EVs, less gas-powered cars. And it's gotten to a point probably where government subsidies aren't much use anyways. They've become cheaper. Completely contradictory. Tesla's up like 15% today, which also doesn't make sense.
The guy who runs Tesla was one of the more vocal people in support of the person who won, right? And again, he's
now in the inner council.
Yeah, he's all of a sudden going to become like the Secretary of State for industrial development or what have you, right? So it's a mug's game in that way. One other theme I saw was like you look at U.S. banks, U.S. Regional banks, they're up over 10% today. Goldman Sachs is up 12-13% today, and I think one theme there is like deregulation, right? There's going to be more M&A activity happening, consolidation, more business activity happening in that sense, right? The opposite of the energy trade there is like if you look at it, the renewable companies, they're all down substantially as well, almost as much as the other names have gone up. So it's a volatile day in a lot of different sectors, but it tends to smooth itself out over the weeks, months, years into the future. It's obviously interesting talking points, but I think one thing that you like to support is the fact if you just buy the broad index, you kind of get all of it, right? The pros and the cons.
Maybe there's a case for having a bit of a tilt to small cap as we see today. And, we're looking at the largest companies. Yeah. There's a huge market. There are almost 3,000 stocks in the U.S. Yeah. There are 10,000 or so in the world among the developed countries. There's a lot more than just the 7 or the NASDAQ, or even if you're talking S&P 500, you're being very exclusionary if you're just want to own the 500 biggest companies in the U.S.
By the Dow Jones Industrial Average then, right?
Dow Jones, should we touch on that for a second?
Yeah.
I did do a little tweet on the Dow Jones the other day, and again, let's just touch on this, and then we'll close off this podcast, this Minicast, before I go on too much of a tirade. Would you like to invest in 30 companies, Justin? They're chosen arbitrarily by some kind of committee based on how these companies did in the last however many decades. They're basically the best 2 names in each sector, and we're going to occasionally drop a company after it falls out of favor, and then buy a company at its peak. So let's say Intel, which hasn't been in favor for I think at least 10, 15 years, getting dropped from the Dow Jones. Out of those 30 stocks, they're choosing to drop Intel now after it's done crappy for 15 years. And now they're adding NVIDIA after it has gone up a whole bunch. I'm not saying that's completely wrong, because the long-term history of the Dow Jones shows it does track the markets to some extent, just not perfectly. But why wouldn't you just want to own the entire market, not just 30 companies, but own everything? And that way, you owned NVIDIA back in 2005, and it was a tiny, tiny fraction of what it's worth today. And you owned it all the way up as it was going up, not now, just as it's at its $3 trillion tippy-top peak.
I would say that one, comment on that is that at least you said it's a couple from each sector, so it's a more broader representation of the overall economy, right? Whereas the S&P 500 or the total index, the total market index is going to be still heavily weighted towards the largest companies, which at this point is kind of those big mega cap names like your Apples, Googles, et cetera. And so in order to make sure that a pharma company or a financial company or an industrial company is sort of represented, at least it's a more broader representation of the entirety of the market, as opposed to, or 1/3 of it being, tech, or half of it being influenced by all of them, by a couple major sectors. So again, it's been used for such a long time. There's history behind it.
Okay, we'll leave us with one question for you, Justin. Which is worth more, Intel and Apple combined, or NVIDIA?
Well, NVIDIA is probably not. If it's not number one, it's close to number one. So I'm just going to go with NVIDIA. Yeah, the name that
NVIDIA is number one.
He who has shall not
if
be
you
named.
if you
We're naming
combined
it.
if you took a cloning machine and you cloned Intel, so you had two Intels, and you
Yeah.
combine both of those Intels with Apple into one big company, by
It
market
still
cap,
wouldn't.
they're still
Yeah.
a tiny bit smaller than Nvidia. That's how crazy Nvidia's price has gone. But anyways, we'll leave it at that.
Yeah. Enjoy the election counting.